Hello traders, welcome back to the bullish bear FX. So basically in today's video we are going to be speaking about drawdown recovery. So I decided to pick a very unique topic that will help you actually pass your profit account, right? This is something that you can add into your trading plan if you have one. If you do not have one, then you can start using this as a booster, or you can use it as a foundation to actually build up your trading plan. So in today's video I'm actually going to be using my calculator. I'm gonna be using my phone's calculator, and I'll be showing you guys how simple it is to actually calculate the drawdown, to actually have a drawdown recovery plan. So I'll start off by saying scared money does not make money. So what do I actually mean by saying scared money does not make money? So scared money does not make money means that, let's say I'm gonna be saying an example, be using an example, right? Let's say you purchase a $5,000 prop firm account, right, with scared money. You are afraid to invest in it, and then but for the fact that your mind is telling you just to invest, or maybe you think that luck can happen, you will invest and buy a $5,000 prop firm account, and you start making money while still scared that you may lose the account. That means you won't make any money. This is where over risking actually comes in. When you see that you are in drawdown, you decide to cut the trade short. I remember I tried purchasing a $5,000 account, and when I purchased the $5,000 account, I would enter a trade, right, and it will go in -$26 and I'll cut it short, -25, cut it short. Okay, then I started risking big on the account. As you all know that a $5,000 account, the daily drawdown is, I think, somewhere about 250. If I'm not mistaken, it's 250 and 350, right? Well, most of them. And then there was a time I entered a trade which was running right about 156, and I was risking 180, and then it went into drawdown, right? Because the stop loss is 180 now. If it could hit 180, the profit could actually even cut me off. So I just decided to risk big. So it was like do or die thing, right? Which is not a good mindset you should have while trading. So I went in, traded, and then the trade was running 126, 130, going down there, and then the trade actually came to 150 something or 60, 167, which was close to 180, and I decided to say, no, there is no hope for this trade, let me just cut it short. And then I closed the trade, not knowing that the momentum that was pushing the market to go to the upside was gonna come down, and that momentum will be a week. The market came down and started pushing down. As it was pushing down, I didn't notice that there was news, and then the market spiked down, going into my direction, which could have paying me something like 3%, getting me out of drawdown and actually making me some profit as well. So scared money does not make money. So that's a lesson that I've learned. So that's just a short story that I wanted to tell you guys. So now let's start with the real deal of the video. So your fixed risk should be 0.5% per position. You should be risking 0.5 per position. This is actually when you're at break even or you're in profit, like break even or plus. So in today's video I'll be using a 100k example, right? Account, a 100k example, 100k account example, sorry guys. So you all know, most of you guys that are familiar with prop firms, you already know that 100k, the max daily drawdown of a 100k account is $5,000, which will bring you to 95k, right? 95. So now I'm gonna be showing an example of how to get out of drawdown, because if you're at $95,000, you lost the challenge and you're no more in drawdown, you're not even in profit, so you're not anywhere in this account, you're not even logged in, you're disabled, so you have lost the challenge. So let me say -4k, $4,000, which is 96. So when you're at $96,000, you know that the max daily drawdown is 95. So when you're at 96, that means you are plus $1,000, right? So that means you're at $1,000. So if your balance is $96,000 US, you are left with $1,000 US left before before max daily drawdown. So what you're gonna be doing is this: don't focus on the $96,000 US, but focus on the 1,000 that is in between. So what do I mean by focus with the 1,000? So this is what you have to do. You need to take the $1,000 US and divide it into 5 trades, which will give you $200 US, right? So you have $200 US to risk a position. So remember, I divided a $1,000 US into 5. So that 5 is actually 5 trades, and in those 5 you need to take 1, 1, 1, 1, 1. And when you take one trade, you risk 200, right? So you can take a trade and still risk 200 to make 400 or 600 in one trade, right? Most of you guys know how the market moves, mainly with currency pairs, indices, which is like US30 them, but it's very volatile when you're in drawdown, gold, and GBP USD as well. I prefer you take Euro USD trades, Euro USD trades, USD CHF, and etc. Right? This goes down to the pairs that you trade. Most of the policies, you know, that trade one pair. That's something that fits you, right? So for us to be back at break even, we actually need $4,000 US, right? Because we are at 96, we need $4,000 US. So your balance right now is $96,000 US. Sorry guys, $96,000 US plus $4,000 US will actually get you back to break even, which is 100k. That number actually looks good. So just joking, guys. So you have 200 risk per trade, which is equal to 5 trades to play with, right? So you have a 200 risk per trade, which it's equal to 5 trades, right? If you remember, you remember what we were doing. So remember, we are at $96,000 US. So for you to actually get back to $97,000 US, you need another $1,000 US. So how are you gonna get to $9,000 US? So this actually means you need 5%. You need 5% running profit while risking 200, right? Remember, I said whenever you take a trade, you need to risk 200. So you need 5% running profit on your risk to reward tool on your risk to reward tool ratio. So this actually means your risk to reward ratio tool on the trading view app should show 5% TP, just take profit, right? So if it shows that way while you're risking 200, when your trade actually hits take profit, you'll be out with a $1,000 US, which will get you back to the number that we are looking at, which is $97,000 US. So when you're at $97,000 US, let's say you're at $97,000 US, right now you need a $3,000 US, which is 100k again. That number looks good. $97,000 US plus $3,000 US is actually 100k, which is break even. And don't already look into the thing of you wanna get to 3k, which is break even in one trade again, risking your whole account or risking $1,000 US. No, we have not yet even gotten to risking 500 yet. So you still have to use the method of 200, right? So let's say you're at $97,000 US. You're at $97,000 US, which means your break even is 3k, right? Your break even is $3,000 US. So you're now up at 97,000, which is 2,000 between 95, right? So let's do this. 97,000 US minus 2,000 US. It's 95, right? So right now you have 2,000 US. So right now you have, sorry guys, not 20,000. It's actually 2,000 US between your daily drawdown, which is your max daily drawdown. So your balance now is $97,000 US, right? Let me clear that. So right now your balance is $97 US. So you can use this method now, which is 2,000 divided by 3. Sorry guys, 2,000 divided by 5 trades. 2,000 divided by 5 trades. It's 400. Boom. So imagine if you could plus a 1,000 on a 1,000 while risking 200. What could you do with the 400, right? What could you do with the 400 the trade, which is now 0.4%? 0.4%. Now I'm speaking in percentage. I'm not speaking about money. I'm saying in percentage. 0.4%. Remember, when the video started, I said that fixed risk is 0.5% per position, but now you are risking 0.4%, which is because you are in drawdown. Remember, I said when you risk 0.5% is when you're at break even or plus, when you're in profit. So yeah, okay. So now you're at 97,000 US dollars, right? 97,000 US dollars is on your profit account. Your 100k account is now showing 97,000 US dollars. So for you to actually get back to 98,000 US dollars, for you to actually get back to 98,000 US dollars, this number, you only need to be running plus 1.5% on your risk to reward ratio tool to get 98. So there you have it, right? $98,455, right? So now your break even is 2,000. Your break, for you to get to break even, only need to be running 2,000. So let's see. There you have it, 100k, right? So you only need to be running 2,000 US dollars. So let's remove this one, these zeros, and turn them into zeros. Okay. So now you're at 98,000. So now you're at 98,000 US dollars, right? So your break even is 2,000. So you need to be running 2,000 profits to actually get to 100k. So now you are up at 98,000 US dollars, which is 3,000 between 95,000 US dollars. So let's see if it's worth, if what I'm saying is true. So you need 3,000 US dollars. Sorry guys, I'm sorry. It's supposed to be minus 3,000. So you're back at 95. Remember where we started from, guys? We started from a 1,000. So now we're at 3,000, right? We started from 96,000, which was 1,000 between. So now we have a 3k in between. So right now at this point we are up at 98,000, which is 3k between 95,000 US dollars, which is the max daily drawdown. So your balance is 98,000 US dollars. So you are now at 98. Sorry guys, so balance 98,000 US dollars. So if you are now at 98,000 US dollars, you now got 3k, right? 3k in between. So 3k divided by 500 is now 6 trades. So let's see, divided by 5. Oh my goodness, sorry guys, 98,000 divided, no guys, sorry. So now 3k divided by 5 is actually 600. Remember guys, we started from 200, we came 400, and now we are at 600, right? So the same method goes down. You need to be using this. So the same method still goes down. So 3,000 divided by 5 is actually 600. I mean, yeah, 600. So 6 trades you are gonna be risking a 600. I mean 5 trades you're gonna be risking 600, right? Divided by 5, 600. So you have 5 trades again, but now it's more different. The money that you are risking is actually 600, right? So okay, we have the 600. Okay, 3k. So now let's say plus a 2.5% on your risk reward. Sorry guys, sorry. 98,000 US dollars, 8,000 plus 2.5%. Yeah, back at break even. So guys, now you are back at break even while running. So this actually means if you are running at 2.5% on your risk to reward ratio tool, then you're back to break even. So guys, I hope you picked up something in this video. I need you to rewatch this video. You can watch it 10 million times, guys. It does not matter. The fact that there is games in this video, there is something that you could pick up from this video. If you do not pick up anything from this video, you need to rewatch it. Surely you pick up something, right? Then this is not only for profit account, it's also for investor capital, personal accounts as well. All you need to do is just take it and implement it on your on your trading account, and then this according to your balance. So if it's hard for you to do, you can comment below, or you can actually send a message Telegram and get help, and I just send you the account balance, and I will create a drawdown recovery plan for you, and I would send it to you. So guys, remember that you always have to give yourself 5 trades. So give yourself a room of at least 5 trades when you're in drawdown, and slowly walk your way back up. So guys, much peace and love and happiness, guys. This is a bullish bear FX. So yeah, thank you guys for watching.